how to do the valuation in case of delisting of equity shares. So meaning what? Meaning uh, sometimes company do decide to company which are listed on the stock exchanges do decide for various reasons to get their shares delisted, and it may be for many reasons. One of the reasons may be that the parent company does not want to get involved in too many compliances, being a listed company, and therefore they would rather prefer to have the company delisted so that the parent company has a better control on the operations and the affairs of the company, and that is why they will go for the delisting and by following the due process. Delisting can be voluntary, or delisting can be compulsory. So, what is the meaning of delisting of voluntary? So, voluntary delisting is when the company decides to get the shares delisted, that is the voluntary delisting. And the compulsory delisting is when the number of shares which are available in the public domain are less than the minimum threshold which is required for a company to remain listed. So if that threshold is broken, then this company has to go for a compulsory delisting. How will the pricing be done in case of voluntary delisting? So the pricing in case of a voluntary delisting will be done through the process of book building, and that means what? That means it is the same thing as applicable in case of IPO, and as we discussed, as per Regulation 6, sub Regulation 2 of ICDR, SEBI regulations, and book building meaning what? A company will give a range, make an announcement, and saying that the company is going for delisting, and therefore the company would like to buy the shares from all the shareholders, and this is the price range. And the price range will be given, and the people will make the offer uh, of selling their shares. So under this process, the final exit price would be that price at which maximum number of shares are offered, and not the price at which maximum number of shareholders are placing their bids. So that means what? That means what is going to what is going to be the deciding factor is the maximum number of shares and not the maximum number of shareholders. And based on they will decide the final exit price, and this exit price the company will purchase the shares from all the shareholders and then go for the delisting. And this is how, friends, pricing is done in case of a voluntary delisting, and that is through the book building process.